When you have a personal residence and you decide that you want to sell that and you may incur a loss on selling it, that loss is never deductible. If you decide to sell that property, your personal residence, and you make money on it, as long as you've had that house for at least 2 years, you can exclude, if you're a single person, $250,000 of the gain. In other words, you paid this for it, you sell it for this, that difference up to $250,000 is free. If you're a married couple, it's $500,000. Anything over that, you're going to pay a long-term capital gain tax on that. One of the vicious rumors out there is that when you sell your home residence and you buy another one, that you have to buy a more expensive piece of home real estate, or you have to trade it, or that you have to pay tax on that. That's just not the case. Back in the old days, you could keep trading up on a property, but about 20 years ago, they got rid of that provision. As long as you have it for at least 2 years and use it as your primary residence, you can sell it and not pay tax on the gain, the first $250,000 or $500,000, depending on your marital circumstances. When you have a property that you use as your primary residence and you convert it and you change it to a rental property, the rules are still the same, that on the date of conversion, you cannot pay tax on that gain. However, when you use it as a rental property, we had this depreciation thing we talked about, you're still going to pay tax on the recaptured depreciation, but 2 out of 5 years, you have to have used it for personal use. And if you sell it after the, say, 6th year, and now you've only used it 1 year out of the last 5 years, the whole gain becomes taxable. So you have to be very careful when you convert a personal residence that has this huge deferred gain and convert it to a rental property. Sometimes it's better just to sell the property, take the gain for free, then convert it to a rental property, because sometimes you might get into a long lease, you might have to keep it, and you give up that whole benefit of having that excluded gain.